I'm Candy Skarlatos. I am currently on the Redwood Forest Foundation board, and my past, I was the senior vice president at Bank of America's in charge of the environmental program there. Well, I graduated from Sac State and got my CPA. That was a real goal of mine, and then moved over to the Bay Area and worked for a CPA company for several years, and then went and worked for Bank of America from there as a division finance officer. And in that particular role, I just was not working the environment at all. Um, but at one point, the division that I was the finance manager for, we sold it. And we sold it because it was, we felt like it was not going to be a long-term product. And this was traveler's checks and cashier's checks before ATMs and credit cards. So they did have credit cards, but not everybody like they do today. So those products were, we felt were going to go by the wayside. And so we sold that division. And while that division, what happens when you sell something like that is the company that buys it asks you to stay on for a certain amount of time to keep your personnel there. And so we were asked, my boss and I were asked to stay for a year or two longer than, and it was kind of boring during that time because you're not doing much. And it was interesting because Bank of America at that time, the CEO, Dick Rosenberg, came to my boss, who'd been with the bank a long time. He came and asked him if he wanted to do a special project. And that was to start an environmental, or to look into what an environmental program would look like at Bank of America. And so my boss came to me and said, "You got some time on your hand, you want to help?" And that was the way that I fell into that. So did I have environmental passions before this? I probably cared, but I was raising a family and had a job and probably not doing much about it. So to get this opportunity, which just fell in your lap, was just, and you're getting paid for it too. What a deal. Basically, I was the senior vice president for the environmental program at Bank of America. And the program started in 1991, and it was one of these opportunities that you don't get very often. I was a finance officer before, and I got to move into this policy area. And when I was there, the whole thing at Bank of America was, what does a bank do? And so we were trying to discover these things and what we should be doing for the program and for the environment and for the bank. And through that process, I came across Mike Baylock. Mike worked for the forestry sector at the bank, doing lines of credits and big loans for forestry. That included the paper industry. And originally, through him, I worked with other companies in the forestry sector on recycled paper and that type of thing. We really made the forestry companies mad at us. The bank doesn't want people that is their customer mad at them. So that was the first time I started working with nonprofits and companies, building consensus about what you could do about this project, acknowledging that we were, here we were at the bank, and we put a recycling program together, and so we had all this paper, but who were we going to sell it to? And how are you going to drive a market, because that's what you want to do, economic value to it, with all this paper, if you weren't going to buy recycled paper, if you weren't going to put it back into a product. And so after making Mike's clients a little mad at us, we got those companies to start working with us, and the nonprofits. And most of the expertise actually comes from both sides, because you had to understand the business, why they wouldn't want the recycled paper, why they would want to keep their standard the way they were, and the nonprofits that gave you the reason why you needed to. I mean, we knew we needed to do it because we had all this paper that we needed someone to buy, but for the environment, why were you doing it? And so that's kind of the same situation in terms of RFFI having to, or Redwood Forest Foundation, having to work with the forest companies and the nonprofits up here, and get through those forestry wars and the history that RFFI has behind it. That's basically what you have to do, and to make these programs work. You can't just make them work for one side. And again, these issues, regardless of what it is, are not black and white. Very difficult. The other policy that came up during this time for the bank was sprawl, and the fact that our population was moving out into rural areas. And for instance, the big thing that brought it to my attention was when a group took me over, a nonprofit group. We worked with business and nonprofits. And when a nonprofit group took me for a flight over the Sierras to look at clear cuts. And what appalled me more than the clear cuts was the urban sprawl, where you saw all this forest land being cut up and not productive. And those natural resource communities were in a bit of a change because they no longer had those jobs that were high-paying, good jobs, and they tended to cycle into a different type of tourism economy, and you weren't able to manage the forest or the environment because you had all this cut up patterns of ownership. And so when you had a stream or a river that was impacted, you were not going to get clear solutions for the whole stream or river. You were only going to get it when the particular ownership decided that they would participate. And in seeing those types of things, it came to us that we needed to, support urban redevelopment, of course, and some of the other things that would help, but also to look at how you could save big sections of land, and that you could work on restoration, work with the nonprofits that were doing that type of thing. And through that process, Tom Tuckman came to Mike Baylock and talked to him about community forests, and in particular this one that was up in Mendocino County. So in the project, we started working with the nonprofit Redwood Forest Foundation, who had a lot of history in the Mendocino area and around the redwoods and the forestry products in that area, and understood that they had been working for a long time bringing consensus with each other in terms of what they'd like to see for those forests, how they'd like to have jobs. They really would like to see restoration happen, and they would like to see these large pieces of property be maintained and stay together instead of being cut up. And as you look around Mendocino County, you see that there is a lot of cut up parcels. And again, it's just like the Sierras at the time when I was over in that area, where you needed these large parcels. And also, the big benefit that really made me want to be part of this project was kind of the community side, because when the loan was paid off, this would become a foundation for the community, in which the funds would go to the community and would meet other social needs, whether it be a library, a new school, whatever the community needs were, that would support that. And so the money would stay in the community. And in other areas, and in the past in the Sierras and Mendocino County, the large timber companies usually provided jobs, provided some things for the community, but did not provide long-term money staying in the community to support community needs like libraries, schools, scholarships, that type of thing. And to me, that was the most exciting part, and the difference of this versus a regular just sustainable forestry practices. And I was excited about that, and I think that's probably why I thought this was a project that, it covered the social side. And when we were talking about the 3 E's at the time, the environment, equity, and economics, it's hard to find the social equity side, and I felt like this one really did have that piece. We were able to get the bank to agree because the senior management did believe in the environmental program. The interest was that, we had just gone through a big merger with Nations Bank, and it moved headquarters to North Carolina. And North Carolina at that particular time, I really didn't know if they would keep the program or not. But at that particular time, North Carolina was experiencing a lot of environmental issues. Their forests were in really bad shape from air pollution. And the senior management there, in particular the person that became in charge of the program, you always need a senior person to support a program like this. And that particular person was really concerned about the future of, the environment for his grandkids. And it's always within the program, people like Mike Baylock and other people that step forward is because they personally end up caring. And the whole point of the program was to build it into how they do their business. But the people that know their business best are the people in that particular line. So to come in from a program and site and say, I think you should do this, it really wouldn't work. That's why Mike Baylock coming to me works a lot better, because he knew the finance side, and I worked with nonprofits, and together we could start putting this, the thought of why a bank would do something like this. And we wanted to build the program larger in the credit side, because if you really think of a bank's influence and impact, the credit side is the most important part. I'm not going to downplay our recycled paper and recycling and energy conservation. Those things were not easy to do. But if you really want to look at the impact a bank has, it is through their money, and that's the credit side. And so we were looking for these environmental credits, and they're hard to find, because there's no, as most people know, environmental issues are not black and white. And so you think you might be doing something good, but you're impacting something else. And so this particular forest project seemed, like I said, to have all those 3 E's, had a group of a nonprofit group that was local, that was working real hard to make something happen. So in looking for a good credit, one of the things that you really want is usually to have some equity in the project. And this project was looking for equity. There was a group, Tom Tuckman and other people within the nonprofit, Don Kemp, etc., they were out there looking for investment partners that would bring the equity. And this was taking quite a while. So in order to get this land, as I understood it, we were coming up against a deadline. And so I went to senior management and asked them if they would just get this off the market, so that the land would be, we wouldn't have to compete for it, because this was a deal that had come to us. We didn't want to compete for it, and we would look for the equity later. And we did some financial models in terms of the conservation easement was going to give us kind of that equity part. And because the state had just passed a bond that, a forestry bond that basically this project fit that bond needs, or what the money was supposed to be applied for. And so when the bank looked at that and said, yeah, we can see where that money could come in and support the equity side, then I think we can get this off the market. And it took the very senior management to sign off on that and do the deal. The land was purchased, and the bank did make one stipulation. Well, they made several, but the one stipulation that the management of it, because this was a nonprofit, very small, didn't have a history behind it in terms of managing forest lands. And so they did stipulate that we use the Campbell Management Group, which is a larger national company, and so we did use them. We then went on to start working on the conservation easement, and I was probably at this point in time leaving the bank and happened to be moving to Mendocino, which I actually wasn't part of why I wanted the deal done. I want to be honest about that. I did not do it because I was moving to Mendocino area, but we had planned on moving here. So I left the bank, and at that point in time, the Redwood Forest Foundation asked me if I would come and be on the board and support the financial side. I've been working with them for quite some time, so it was not a surprise, and so it was an honor to be asked, and so I started working on that side of the aisle, I guess you would say. So we got the money, we got the land, we had a management company, and the conservation easement became really important at that point in time because that was our equity part, our down payment. And so we started through that process. And again, I was not one of those people that were actually doing. I was on the board and doing other things, but Don Kemp and Tom Tuckman were the big lead, and Art probably were the big leaders in the board working on that. We worked until we came up against two things. One, the forest industry, several companies in the forest industry disputed that this was a good use for the funds from the bond, the forestry bond. And so that made a delay because the state agencies involved in those easements wanted to make sure that they were doing it properly, and so that delayed it. And then the other was, this was in 2008, and state of California hit a real economic problem in terms of don't know what we'd call it, our recession hit, and the housing recession hit, and the state did not have money. Even those bonds had already been sold, they couldn't, the legislation basically, and legislators basically said they were not going to use bond money when they were in such bad shape statewide. And they'd have to work their way through on a national level. We all had to work through that era. And so that delayed the conservation easement for quite some time. Meanwhile, the debt was running up on this loan. And that made it financially less feasible for RFFI. As the debt grew, we were trying to figure out how you have a sustainable forest and pay back that debt. And that was a really bad crisis time. We did work through the easement part and did get the easement, and that was very helpful. We didn't get as much as we had proposed, asked for, and thought we would easily get. But we did get some good money, and that did help in terms of bringing that debt down. But we had to move forward as a board to decide how we were going to pay this debt off. And at that point in time, we started looking at carbon. We had actually, because Tom Tuckman had been working on carbon issues, had built that into the credit agreement, that if we sold carbon, a certain percentage would go directly to the bank. And we started looking at that as a possibility. And those markets, as we got out of the financial crisis, the state got out of that crisis, that market started to look better. That has been the way we've been able to pay down a great percentage of these loans. So we're pretty excited that the carbon markets have supported this forest land and this community, and we hope that it will continue to. I think the carbon side of it is just a way to get the property to be sustainable for the, well, it certainly is good for the offsets, but you could use it just to protect the forest and never log. But it does not help the economic side of that community in a rural area where you need those types of jobs that are higher paying, that have benefits, and are going to stay in the community. So if you want to just protect the forest like a park, then that's one thing. You could probably purchase forest lands through carbon offsets. But if you wanted to have other economic value to the community and make sure the social side of that works, then I would prefer to see that there be sustainable logging and that that's part of the management of the forest. We can have lots of parks. It's just, we do have economic needs, but we also need that natural resource in so many ways outside of the community. One of the reasons I left the bank was that I'd gone through 4 mergers, probably 5 CEOs, and the bank had said they would, on the last merger, said that they would stay committed, and therefore I felt comfortable leaving the program and felt that I needed to leave. And so I did leave the bank. Yeah, the bank I left the bank, but the program continued. And so we did get some foundation grants from the bank and afterwards to keep supporting the nonprofit side of the deal. And we worked with the credit side during some really tough times, like I mentioned, not getting the easement. And the bank continued to support us. One of the things about that credit line is, or the debt, is that we don't owe them anything until it was a long-term payback period. And so we didn't have the funds to pay back down any of that debt at the time. The bank understood why and continued to support us. And I would say at that point in time, probably Mike Baylock being there was our biggest support because he understood the deal, he understood forestry issues and the economic downturn we were in. Out of that, Mike eventually did retire also from the bank, and we've had a lot of other people come and support our project, but also having to support the bank side, in which they have to make sure that the bank is eventually going to receive its money back, or at least try to get its money back. So you are dealing with a tougher side of the bank maybe than the nonprofits understand. And even though I tried to make nonprofits understand that it's not the bank's money, it's our money. You know, people put deposits down. They have their investments with the bank and they want that money back. So therefore, it's your money that's sitting in the bank that they're using. So as much as possible, you want to pay your debts back. And so the bank has been tough in some regards in terms of staying with us. They are at our meetings. They know what's going on when we have an issue. We make sure we're always in compliance with our reporting to them, and they're always asking questions. And that's what they should do. So the turnover there, we have seen several people turn over after Mike left that have our deal now in the bank. But I would say, even though they've been tough, this is my own personal belief, that most of them have been supportive. They have come to some meetings they didn't have to come to, our annual meetings, and even brought their families sometime. And they ask the tough questions, and they make a lot of work for us, but I think they're supportive of the project. I do not know, in terms of the bank as a whole, whether they're still supportive of it, other than these people that are working on the debt. But the bank does still have, so now they have the new social responsibility programs, and the environmental program fits in that section of the bank, the public policy side. So they still have a commitment there, and I do not know how we relate within that commitment. I think it's been tough to show us as a model because of those difficulties in the 2008. That the bank would do this again is real questionable. We were hoping it would become a model, that the bank could do short-term lending to get these properties out of the market, and sustainable forestry practices could happen. But I don't see it as a model until we came into the carbon. The carbon is more of a model in that these forest lands are really attributing greatly now, I think, to carbon offsets, and they're needed. And that does sustain the forest and the other environmental attributes of that forest. A working community forest to me is that it harvests sustainably and brings economic value to the community. And that's one of the things in terms of the conservation easement I was really happy to see in there, is that easement says it will be a working forest. Now what that looks like in the future, I don't know, but I again am hoping that it will bring economic value back to the community, not just in jobs, but actually in funds to support things where a natural resource community doesn't have a lot of outside support. There's always someone trying to take their resources out of the community, but to add value back so that you have the libraries, the education, the schools, support the kids, that type of thing in these communities. So that to me is a working community forest. In terms of the community side, I think we have now staffed up, and we are able to follow up with the community. It was one of our downfalls early, that we didn't have the time and support for our community groups that want to participate with us, because we were working through so many issues. We have matured so much in terms of what we're doing now, and to have the staff to do it is a big deal to me. So I guess you feel really good about a project that you just see have so many hurdles and be able to get through those hurdles. Not always the way we want to on the outcome, but always progressing. I guess the big thing is, I don't think in my lifetime that this forest will be what we want it to be. But I think that at the end of my lifetime, I will see that it has progressed a lot. And to see a project like that is pretty rewarding.